Yeah, great. Okay, we're in. Okay, you can see my monitor over here. Now, obviously, the chart I had put out for you today, we've moved a bit on the rate cut. So let's go through and have a look what we're going to be doing running into the Christmas period, which is normally very quiet. You can see from the hourly chart that we've come down to, but we're going to have a little bit more of a longer term one. So you can look at the weekly charts. Now, when I went on to Dale's talk group the other day, this is what people should have been watching, was this chart here. Can you all see it? Yeah, okay. Now, you can see where the market went back to exactly the 61.8 Fibonacci retracement, and why people were leaping up and down saying the euro was going to 140, 142, 145. You can see here why it hasn't, and what we're going to do in the next 6 to 8 weeks. Now, I strongly believe that the euro is going to get a lot lower, and we're going to test a trend line coming in here, and that will be around the 129.80, 130 area. Now, that's good for a market to be able to do that. You can see here where the longer term indicators are actually showing that this move lower is going to happen. And really, if you take a little bit longer term out to look at the various markets, you should have been able to position yourself waiting for this fall. And did you all get it? Yeah? Okay. So, that's, you didn't, okay. It was a real shame because it was such an explicit sell signal up here. And I think what you have to do, when you look at what a market is doing, you're always looking as a technical trader where you should get into a really good medium-term, low-risk trade. And it is normally when the market broke up through the 50% level, and then only went down to test its neckline here, and then went up again, we knew that it wasn't going to hold this level because it had already broken it. So automatically, you look at the next big resistance level that you're going to come across, and it was the 61.8 weekly dip level. When you see that, and also your trend indicator starts to widen, you can see there it's nothing. So you know that something's going to move. What you're trying to get through is which way is it going to move and how fast is it going to get there. So up here, you were so low risk to sell up at the 136.80 area, 138 area, because your risk was only above 139.20. The DMI is a directional movement indicator, and this should show you what way the market is going to go. I mean, I look at it very, very rarely because I think just by looking at a chart and stochastic, you can see where the move is going to come. So you don't really need that. That's more reinforcing it when the move has already started. It is a lagging indicator, as I've explained before. The leading indicators are these, stochastics, and that's turned bearish. So you're looking for a top. Now, when you do that, when you go out to the weekly chart and look for a top, you can then scale it down, and you're looking then for a daily chart. Do you see what I mean? So you don't get the full picture of a move. I use a 10-3-3 stochastic on a closed basis. What I was saying was that you don't get the full picture. If you look at that, you're going, yeah, it's an uptrend. I'll just take that line off there because I don't need that one. So that's why people were getting all very excited up here, is because they'd broken this point. It wasn't until you actually went out that bit further, and looked at what the longer term charts were doing that got you into the move. You wanted to be short euros on a rally to that 61.8 fib level, which we got, and now we're looking on target for the medium term. We're looking on course for the medium term target, which was 132. And you can see that here now you've got the 132.20 moving average coming in there. That's the 200-day moving average. So around this point here to here, the market's going to be well supported. And going into Christmas, here, we're looking for another turn for the way to show us that the market's going to start to trade up again. So I know people have got out of their short positions over the last 2 days. Mainly today, actually, we've got out of a lot of them. And I do expect the market to base here and here, and for the next few weeks to try and recover back to here, which would be the 134.70 to 135.20 area. Okay? And that's when you want to go in and sell it again. Okay. Now, I do look at short-term charts, as you all know, but I mean, it doesn't really tell you a lot, this one. So you really did need to get in and go out farther so that you could actually gauge what direction you were going to go in. Now, this applied to all of the currency markets. So now I'm going to throw it open to you and say, what do you want me to look at for you? There's no point me going in and showing you a chart of the New Zealand dollar if nobody's looking at it. So if you show the Aussie, one of my little favourites, okay. Again, you can see that we broke out of this triangle. I leave these lines on, but for the purposes of today, I'll take them off. You see this triangle here? Okay? Now we've broken out of that. Now if you measure between this point here and this point here, and you add it to that break point, it takes you down to around this level here. Okay? So that's what we'd be looking at the Aussie to reach. You can, and I think it's going to happen quite quickly. I've put the long-term indicators on, but you can see the short-term ones. You see where we just split that 50% level, okay? And we couldn't, we're trading below, is there a specific chart? Yes, I think if you're trading, you have to look at all the time frames, because you've got to miss the bigger moves, you know. And it's all right scalping for 20 or 30 pips, but you've got to, if you know roughly, if you look at your chart, you know roughly where it's going to go, you can actually place your orders in and basically walk away and leave it. Okay? If you look at the Aussie, once it broke and went straight down, what I'd like to try and get through to people is that you could trade like bank trades, hedge funds, with very little effort. But the effort comes into looking at a 5-minute chart. I mean, that is just too much effort, too much noise, too much of people not really knowing. I call it the headless chicken brigade, because that's what it's like. They're all running around not really knowing. The people that make the money are the ones that stand back, look at a longer term chart, and place their orders accordingly. Okay? You can see here, it's flipped up. It's not gonna get back up to here. It's gonna fall back to the minimum of this area here. And I think even lower. I mean, it is, if you look at technical trading, the Aussie would only be back in with the chance of going a lot higher if we broke back above here. So for the next 6 weeks, I don't think it's going to do that. I think you're going to see here, initially, which as you can see is 92.5. and more importantly, this area here, which is the 89 area to 88.5, right? Generally. Now, if you then, in your mind, think the Aussie's going lower, you can then adapt and look for places you want to sell. Okay? So there you are. You're in an uptrend short term. But if you look at this pattern that is developing on the Aussie, bearing in mind you want to be short of it, but look at this pattern that's emerging here. It is a very negative pattern. And the likelihood of the Aussie breaking this pattern is more prevalent to the downside than the top side, even though the daily charts are oversold. They're not turning yet, and we can oscillate around here. That will ease this indicator to about back to here before turning lower. But if you're not selling on the bounce, here it captured that moving average there. If you're not selling on the bounce, you can sell below this level here, which is 38.2. Comes at 94.28. Head and shoulders working. Yes. Would I use stocks for entry? I use other things for entry levels. For example, the stochastics are showing that the market can trade higher, yet that chart pattern is showing it is going to trade lower. When you have something like that that ties in with your weekly charts, you have to sometimes ignore these and just look at the price action. And the price action for the Aussie is looking for me to be on the downside. Now, even if we went back here initially over the next couple of weeks, that's still a good move down. You're still talking about another 200 points. So you're in with a good chance of the market trading lower. Intraday trading, if you go in with the Aussie and you look at the intraday chart, this is where you can actually pick your levels better. This will be the first area where the market's going to find support. And it did. I mean, we're not alone here. You know, people are looking at charts day in, day out. And it's not just use lot, it's hedge funds, bank traders. You really need to trust me on this, because I've worked with hedge fund and bank traders. Well, I was a bank trader. And although it was very new when I started doing it, it isn't new now. So if you don't believe in the way they work, it's foolhardy to be, to not be aware of the fact that these chart points exist for us to make money. So, is there any other market anybody wants to have a look at? Personally, as I say, I trade on price action backed up with stochastics, and my main entry levels and exit levels are Fibonacci. Okay. Absolutely right, and this is why, Drew, this is why technicals work exceptionally well, because I've had that exact statement said to me over 30 years, and I can only go, well, it works. If it didn't, yes, I was bottom 56. They do work, and it's foolhardy to be unaware of them. You know, there is absolutely no fundamental reason at all, right? There is no fundamental reason that stock the 61.8%. There isn't. It's a technical reason. Now, when I worked for Midland Bank many years ago, we used to have the Bank of England come in and ask us about specific chart points. They'd say, this is when there was a lot of action with the central banks, and they'd come in and they'd say, we want to sell sterling, where would you advise? I'm like, oh my God. You know, so that made me aware that even our central bank, the Bundesbank, they all worked off chart points. You know, they're not stupid. If I may see Eurodollar hit if I might say, which one should I move average? Yeah, that's what I think. I think it'll come down here and have a little blip up over the next few weeks. Now, I want to see the dollar yen. Okay. After working for a Japanese bank for many years, I have to tell you, I'm not too keen on the dollar yen. The weekly chart, to be fair, isn't really telling me a great deal. It just looks like we're in a triangle. Stick within those parameters. It's quite tight. You can actually tighten it up more now. That's it. That's your range for dollar yen. Stay with it until it breaks either way. No, everything's neutral. Come down. Now, what this does tell you a little bit is the fact that when we fell from here, we actually didn't break that 38% fib level. Now, all I'm saying is follow what Michael's saying, but friendly most of that. Of course you don't. Of course you don't, because trading's a very, very personal thing. Yeah, I do. Trade gold, traded silver, traded everything in my time. Silver I haven't traded since 2011. Gold, yeah, I like gold a lot. This here, see when it's come down, it's hit that point, and this is changing to look bullish. These are weekly charts, they're a bit slow moving. So if anything, I would say, medium term, you're buying bits in dollar yen, looking for it to break up back to here. Okay, that's the dollar yen arrow I'm done with. What else did you want to have a look at? Do I see? The only thing I can say in Japanese is watashi anata. And the reason that's stuck in my head is because the Japanese lady that was teaching us, I just kept thinking, what is she? Anata. That's how that stuck. I didn't really get my head around the squiggles and whatever. Aussie, New Zealand. Oh my God. Okay, we've done that. Let's just do the cable, and then I'll go into, funnily enough, I've been following the Aussie Kiwi chart quite significantly. Let's go back to our cable chart. You can see where it's topping out. You can see that there. Okay. And also you're looking at the weekly chart. Now, if you look closely, right, you have got divergence on the weekly charts. And it was quite important that when it went up here, that this was actually falling. So that was your first clue that cable was going to come lower. Your second clue, how do I handle economic data? Do you know what I'm going to do tomorrow? And the guys that are with me in my chat line, I'm going to put in cheeky bids and offers. Definitely. I'm sorry, I can't pronounce it. I'm thinking Druv. I'm not happy with, right, the stochastics I use are 1033. Am I happy with my charting platform? Extremely. I've used CQG for many, many years. And although there are many more out there now, I think for me, data is the be-all and end-all. So if I get enough data, I cannot give you, or me, or any of my clients, a real level to sell or buy. And I think with the charting packages that come out now, a lot of them are with the trading platforms that you're with. The fundamentals can yeah, I can't deny it. I mean, I've had many an argument with the economists. Of course they drive a market. They really do. But, you know, as I said, fundamentals do not give you trigger points. You're looking for trigger points. You're looking at that double top there. You know, your risk was minimal. You knew it was going to come. You assumed it was going to come back down to test the neckline. Okay, which it did. Then it went back up. Now it's on its way back down again. Okay, but here it's going to provide a base for it. So you're looking at 3 points that make a support resistance levels. So you're looking for 3 touches of a line. And you've got that here. So it's going to be, you've got to be aware of the fact that here on the double bottom, you're going to be covering your short cable positions. Now, where this would actually start to motor would be a break of this line, because you've then got that point to that point to extend down lower, which just eyeing it is at 156. You've got your 200-day moving average coming in at 156.5. So anywhere here, you'd be covering your shorts and looking to only resell a break below. Gold still remains bearish for today. It does. I'm quite negative on gold overall. Positive gold overall. But I do think at the moment it's sort of burnt its way out a little bit if I put it to a bar chart. Okay, I still think gold goes higher. But at the moment, it doesn't look like it wants to do that. It looks more like it wants to come down to the 1250 level and then fly. Okay? I am 100% YT technical. I have to be. You know, I have to be technical because there are enough fundamental traders out there who make a market for me, you see. But if it's not that I was lazy, it was the fact that what is flavour of the month? We've done all this, you know, we've been through this scenario before. What fundamental thing are you looking at? Seriously, did anybody doubt that rates were going to be either unchanged or they were going to come lower in Europe? Why? Okay, so I'm not a fundamental trader, but I have to say there was absolutely no chance of Europe putting up rates. I live in Europe, you know. They are very difficult to trade fundamentals, but they've always been difficult to trade fundamentals. But when I started my life out on the life market, okay, the fundamental data would come out, it would react in an instant, and then it would go back to actually what it was doing before the market news come out. What you have to understand is it's already in the market. You're already made the market, the data that's coming out tomorrow is for October. So it's already priced in a lot of the time. So I know that data that we see here is actually what is current, not went on in October. You know, yes, it will react on the news. It always does. But if you get your headless chicken head off, sit back, look, and have yourself guidelines of where you want to trade. And you know what? It's really bizarre. It's like you will make money trading technically. You know, I've never known an economist at any bank that I worked at that traded. And that's what people want you to be if you're a fundamental trader. You've got to know the economies that you're trading inside out. They don't, you're absolutely right, they don't know where it's going. No, Not answer to your question, I don't even have the TV on. When I'm speaking on CNBC, I give a pure technical view. Okay, that has been my life for the last 13 years. It's pure technicals for me. I'm not of the opinion that you should trade both ways, if you know what I mean. I think you have to be one or the other, but you do, if you are doing it in a very short term, you're going to see markets react on news. That's what they do. I'm not a short-term trader. Although in saying that, when we shorted the euro at the beginning of the week, I'm quite happy to all the guys, we're out now, we're finished, done for today. And that's it. Now we'll sit back and we'll have a look tomorrow and we'll put in cheeky bids and offers. I've sat there over non-farm payrolls and I've got filled on 2 orders, a buy and a sell, within 2 minutes. And it's like, thank you very much. Thank you very much. No, I don't need to trade anymore. Now, there are people, seriously, that go in just on these big figures. I know this because I've worked with people that do that. Everybody, pan on fire, listen. Everybody gets confused. I trade on a daily to 240 minute. I look at the 60 minute if pushed. But as I've been through before, I always check all my markets on a Sunday, where I'm on my own. I can spend 4 hours going through the weekly chart, and I write things down. It's the old school. I write things down, and I also, on the CQG, can place alerts. Now, I've got buttons up here that, I mean, you can actually trade on this. Personally, because I've always used a broker, I still do it. I've got a friend of mine that executes the tools for me. So, it's me in a trading platform really isn't that great. I sell when I should be buying and get very confused, you know. Yeah, I mean, I do. That's what I do. I do all the analysis for the week on a Sunday. So I'm poised at what ones are going to trade, what ones aren't. You know, for example, I'll pull this up to you now. Somebody was asking me about the Aussie Kiwi. And that's one I have been looking at. I'll just drag him over here. And if you look at what the Aussie Kiwis have done, I mean, we did break through some good support line yesterday, but I just think this is going to, I just think it's going to base here and go up, back up. I've just got this, looking at the weekly chart with the, I'll pull it up. It's just one of them things, it's like, I just think that's a basey pattern. And unless it breaks below here, I will continue to think that's a basey pattern. You know, you get some analysts, quite rightly, that will say, well, look, you know, that could be a continuation pattern. Could be. No, well, you just put your little trend channel on there. Yeah, it could be. But for the short term, okay, I think that's going to base here and go back up. What it's going to do longer term, yeah, that's not really telling me a great deal, really. But it was just something with the Aussie Kiwi that flew up on my radar, and I'm just like, no. Forex horrible. Yes, I do trade some good moves. The pound's still bullish. I don't think so. I think the pound has basically had it for the time being. And I think we go down to here. And then I think we start to base and come back to this area again. But going into Christmas, I would expect currencies to keep coming lower. Is my husband a trader? Good God, no. No. Did I ever want to marry a trader? No. You know, we're quite, not now, because I've learnt my trade and I pick the moves accordingly. So I do not, you know, have nothing to prove anymore. I've done it. So years ago, when we all worked on the floor, no, because you leave your work, exactly. You leave your work at your office. You know, that's it, you're out, you're finished. I don't want to come home and discuss it. Now I'm at home. I've worked from home since 2000, since the floor closed. I've had my own company since 1996. No, he doesn't really want to know. All he wants to know, is, I want to transfer some money from sterling into euros. When's the good time to do it? And I do that. So that's about the most we ever speak about. What's the most important thing I'm looking for on a weekly chart? Divergence, I think. And these divergence indicators are really quite amazing things. They tell you if the market is going up, okay, let's look at sterling. It's a really good question. So there you go. There's your divergence, right? The market goes up, makes a new high, doesn't do it on the stochastic, plunges. Goes back up, and this is really interesting. You see where it didn't break that 75% there? Divergence. So there were 3 reasons, big reasons we all shorted sterling. 1 is because the weekly chart looked awful. 2 is because it had a double top on it. And 3 was because you had diverging stochastic. Didn't look at the RSI, but I'm sure, there you go, the same as. So what pattern you put on a chart, you can still do on your indicators. For example, you can put a trend line, if I can find it, on this. So you can trade the indicators as well. So if this downtrend is going to continue, and by my book, on the RSI, shouldn't go above that level there, you know, which is like 60%. That would reinforce a bearish view on sterling. I use 1033 slow stochastics on all time frames. I've tried it over the years there are little computer generated algos out there that can go, well look, this is the best one you should be using for this. Do I ever trade on a 5-minute chart? Never. I don't think I've ever looked at one unless there's been a really bad print and I go in to see when it was printed, and then I can ring CQG and go, oi, you've got a bad print. But that's not been for many years. No, good God, no. You know, yeah, there's too many other levels. I mean, please, look at it. Look, if you see something like that, and you see that it's going to come down to here, because that's what it's done before, why would you want to do a 5-minute chart? It will confuse you. It will not make what you're doing. You'll change your mind. You'll be bullish, bearish, and at the end of the month, you would have earned nothing. And that's what I've tried to get my guys. Look, if you're going to trade, do it right. You know? And I mean, I've stuck to that principle for many years. Don't forget, I trained a lot of traders on the floor. I trained traders back in the office. I've run seminars, courses, blah, blah, blah. And I always get asked the same question. I always tell the same answer. An hour. I confess that I can actually see relevance of a 60-minute chart. I don't see the relevance of this, because if you look at that chart pattern, or you look at that noise, if you like, there is nothing really that's telling you. I mean, you're not getting any real. You've got to be one step ahead in anything you do. You've got to be on that. You've got to be on that ball. You've got to be one step in front of everybody else. And that, I mean, how many poor little people bought up here and didn't look across there, or more importantly, there? See what I mean? So if you stick, you should be a professor of trading. I didn't make any money then, would I? See what I mean? If I was a professor of trading, I wouldn't be able to sit here and trade, and trading is my passion. At the end of the day, you know, I'm not in it to sell, funnily enough, to sell your chart. I'm actually in it to trade and get people to trade properly and, more importantly, profitably. Yeah. And if you go into a shorter term trade, you do get conflicting signals. You do. I mean, I've done this many, many years. And if I was trading just off that, I would have done this. So, okay. Where are we? Oh, let's see. There you go. So that's why people are covering here. Okay. And that's why we could bounce up here before coming down lower. So if I was trading an hourly chart, you're selling the break of here, you're buying it back here or here. That's it. But the trouble with trading an hourly chart, auto chartist, are you mad? Why would I do auto chartist? I don't look at anybody else's work ever. And that is not me being opinionated. That is me being, I know what I'm looking for. I don't want to get confused. An auto chartist can only be an algo system that is going on prior price patterns, trends, moving averages, blah, blah, blah. If you are a technical charting trader, you should know where your levels are. Before you actually hit that buy sell button, what's your profit target? Where's your take profit? Where's your stop loss? That's all. That's what you should know. So that's why we're seeing a little bit of buying and short covering. I put the importance of short covering more than people coming in and buying this. Okay. So your sellers are becoming buyers just to take your profit. Both. I never ever trade the first breakout, ever. The reason being, I let the stocks get hit first. Okay? And this is why you will find that the longer you do this and the rules that you have instilled in you, they're like bashing people on the head with the same rule book, you stick to them and you don't deviate from that designated path. So I know that the first breakout is going to be stocks being triggered. So why join that? You wait for the second breakout, or you trade the retracement, definitely. Oh, that's really nice, Reedham. And have you liked it so far? Got to type faster, so I wanted a new thing. What are my moving averages? 9, 21, 55, 200. Yeah, good. They do actually. Because you get so busy. Because as I said, I do this trading group as well. And do you know what? I'm so proud of them. They are doing so well that and it's really good. It's really good. I mean, when you simple. I do simple ones, but I look at the exponential ones as well. And the best one is when they both sort of coincide around the 7. Yeah, I can show you something. Okay, let's look at the It's a bit more fuzzy. Alright, here you go. Let's say we're trading this. Okay. Put a little trend on it. No, it didn't do it. Okay. Alright, let's have a look at it. Today's not a great day with trading breakouts. You just have to, what I'll do is I'll go through, so I haven't got enough time now to trawl through every market. What I will do is I'll drag some charts on next time I do this. I'll actually do a presentation more, and what I'll do is I'll trawl through and show you some breakout patterns. Let's drag the dollar CAD over. Alright, we'll put him on a daily, I think. Moving averages, stochastics. The other important, see, the trouble is because I am aware of certain rules of trading, I forget to tell you. Okay? The other thing that's important are pivot points. Always know where your pivot point is. Okay? It is what it says. It is a pivot level to an e-book. Might do. I don't know. I've been asked to write a book actually. I'm mulling because I don't get time. That's the thing. Dollar CAD. Okay, look, if you look at the day, alright, we've got our stochastics that are showing the way down. RSI down, the price action is going up. Okay, so let's look at that on a weekly basis and see how that's happening. Oh. So, let's put that on there. Oh, one of my guys is short on that. Right. I think that we're going to go back higher on the dollar CAD, okay? And I think we're going to break out. The reason I'm thinking that is this big basing pattern here, okay? And that looking to be a continuation pattern. Alright, so if you bear that in mind and you buy dips in the dollar CAD, you'll be fine. MetaTrader 4 apparently is that, let me just get the trading group out of it. Okay. I'll do the webinar. Let's. Right, that's them gone. Yeah, if you've got a continuation pattern, you're looking then to buy into any weakness. Now, if you look there, if I drag that out a bit on the, you see where your moving averages are like providing support as well. Just eyeball that along. Okay, so you're buying on the dollar CAD anything down to 103.50, 103.20, and you're looking for a break or a take profit at around the 105.35 area. Okay, that'll be your weekly trend line, and you won't need to know that another level until next week. Okay, because that trend line will come down. So next week, I'm only guessing, but I'll say that's around 105.20. So you'll be taking your profit on them just before that, and either trading the second break of that level, not on a weekly basis because it's too far out, but if you look at it on the daily, you'll be trading the second break of that level, or on a pullback again to down here. Okay, it's looking bid on the weekly chart, not looking that much on the daily chart. So at the moment, I have no interest in dollar CAD at the moment. MetaTrader 4. I've heard it's really, really good. Never used it. I am the old school that used to use my team on the floor. When you was back at the bank, you used to have floor teams. So I'd phone them to get execution or go to the spot guys. I was different. I wasn't a spot trader. I was a technical trader. So our little technical trading group, if you like, started off as 3 of us. We expanded to 6. Nobody thought we could ever do it. It was quite funny when we started to make, really good, decent money. And then they started springing up all over the city. And I helped set up 4 of them. So I think your MetaTrader 4 is good. I personally use CQG because data is everything to me. And it's been by far the most accurate that I've ever used. It is expensive, I won't say it's not. How to enjoy a trading group? Well, one of the things I like about a trading group is this. It brings the group closer together to share ideas. For example, I could put in my 2 pence about what I thought the currencies were going to do. It did it. They're all happy. Blah, blah, blah. But also it does give you this, feeling of a bank trading room. Okay? You do have this, you do need to not sit at home on your own and be alone. You need to feel part of something, and for it to be exactly 2 heads are definitely better than 1. And I found, although I was very, not isolated, but I was in the minority of every place I worked of being a technical trader. You were either on the spot desk or you was on the forward desk or they're all different desks. But to be a technical trader, which is now a proprietary trader, we trade anything and for any reason. But we were purely technical. And I think if you bring that to a group, you're you're passing over information that is really relevant to them, and they all talk to each other and talk to me. I'm here all day long with them. You know, if I'm downstairs, I'm on the iPad. If I'm upstairs, I'm on the big one. I've got on the phone, so I'm contactable at any time, and they feel beneficial. They feel benefits for being part of that group because it makes them not feel so isolated. And when you're on your own trading, you know, it's pitting you against millions of others out there, and you are going to get, oh my God, is that the right thing? Did I go in that trade right time? Did I enter it at the right time? Did I exit it at the right time? You know, all down the line, all down the years, I feel the same. Yeah, that's what I just said. Gold is going to go lower. I think it's going to 12.50. Then it's going to bounce. Absolutely. That is what I'm trying to get through to people, is you don't have to be alone. If you've got an idea, you know, share it on the group. They're not quite retiring anymore. They're actually getting involved. And it's really good. It's not like work. I've never thought of what I do as work. I must be in the minority where, to me, every day was an absolute pleasure to get up and work. Yeah, sometimes it is lonely. I mean, but over the years, you get to know what times are things doing what at when. You know, everyone knew the banks were coming in to discuss rates today. They do it every 2 weeks. Nothing new. You know, wasn't going to put rates up, so we were going to do nothing. Or that was it. It was exciting way back when, you know, people didn't know what they were going to do because there was never any to change their minds so much. It was great being in the ERM crisis. I mean, it was great. Traders do not like stagnant markets. We love volatility. We really do. Which time frame do I enter? Always on a daily chart. That will be my main going in and executing a trade. To trade that then throughout the day, I will look at a 60-minute chart. But it won't alter my view. You know, I still think cable's going down. Therefore, I'm happy to sell on any bounce. That's just the way I trade. No, you don't need large stops. You need patience. The key word for any trader, doesn't matter what you do, patience. Okay? If you're patient and you wait for the trade to come to you and don't chase it, okay, then you will enter at a good level where your stops do not have to be that wide. The problem is if you are selling at the wrong level because you think it's going to go down and it's going to do it now, and you don't sit back and look at what you're doing, that's when your stops will be wider. The 15-minute, don't know. No idea about 15-minute charts, to be fair. But your level is yes, it's exactly right. It's 134.10 to 134.20. So now I didn't even have to look at the chart. Well, you can see what I'm looking at. I'm looking at what you're looking at. But I wouldn't need a chart to tell me that was a good re-entry level in shorts. Okay? I've already got them levels in my head. And that's it. And I think if you scale down what you trade as well, I mean, it's different from me. I've done it many, many years. If you scale down what you trade and only look at, say, 5 or 6 instruments, then you've got more chance of actually knowing, feeling your markets. And once you know and feel them, you will feel much more confident in executing and entering the trade. Which time frame do I exit? It all depends. I can be quite stubborn. You know, I think the dollar Swiss has more to go on the top side. I didn't even look at that. I'm quite bullish the dollar Swiss and have been. I think it's overextended on the downside here. I think it still goes much. I like the dollar yen. I think that's the way to go as well, at least parity. Probably 10.20. You didn't get that, Roy Key, or just I've got my hand over my mouth. I don't think the dollar Swiss is overextended. I think we can go higher. Which time frame do I exit? Right. Depends on what it's done. Where my target is. My target for sterling is 159.5. If that had reached that today, I would have covered. Okay? But it hasn't. So I'm quite happy to stay with shorts. Yeah? And sell again on a bounce. I think it's going down to 159.50, and I think you'll see that tomorrow. I don't think gold's a good sell yet, to be fair. I think if you want to be short of gold at this moment, you want to wait to 17 to 18, okay? And then you can go in and sell gold. It hasn't retraced a lot. It really, not for gold. Learn your markets. You know that the gold can move a lot in a day. So if you know what the daily range is, when you see a retracement, you can gauge what sort of retracement it will be. And the level that's in everybody's head for gold is 13.17. How long have I been trading? Since 1982. 31 years. 31 years. And I've loved every minute of it. Now, I'm sure, absolutely sure, that there is another webinar coming up in a minute, so I'm going to have to get off the line and speak to you all later. Thank you very much. I just listened to your experience. Do you know what? You didn't really need to tell me that, did you? You really didn't. Now, I'm not around next month. I'm going back to England. Not forever. I'm just going back for Christmas and New Year. But I'm going on the 14th of December. So, if FX Street wants to do a webinar, it'll have to be before that. I enjoy the cold. I can't do Christmas in the sun. It just isn't the same. Alright? It really isn't. But you've all been great. I've had a lot of good positive feedback for you all, which I always get when I do these webinars. Alright? And happy trading. And just think about what I said. And hopefully when we talk next month, it will be fine. It's not always sunny in England. It's always cold in England. It's always sunny here. I'm in southern Spain. Alright? You all take care. I'll see you all next month. Bye.